A grim diagnosis of the U.S. economy, political conflict, and misleading stock market highs in his new book, The Great Deformation. David Stockman, did you make that word up? He had great music coming out. This recovery's been fueled by, in his words, a flood of phony money. I just like when you talk, David, because no one, you're an enigma wrapped in a riddle, because you start talking and you say, this is all Bush's fault, and like the left goes, oh, I love him, he's a hero, and then you totally pop the bubble of Keynesianism, and they go, well, wait a minute, I love him, I hate him. They don't know whether to love or hate you. So I think Krugman thought, wow, I'm going to love this book, I'm going to love reading it, and then he read it, and then he urinated all over it, basically, after that, and says that you didn't do any fact-checking or something.
Well, I don't know, but I think we're all in the bubble together. We have been for years. As a result, we have a massive recency bias, and we can't understand how far we're drifting towards the deep end. My book says there's a massive state wreck ahead that's going to take down what remains of the free enterprise economy, of prosperity on Main Street, because the budget is a doomsday machine. It's not fixed. It's not on a glide path. If you get rid of rosy scenario, which is what CBO is using today, and I know I invented the first one, so I know what they look like. Right. If you use realistic economic assumptions, 10 years forward, the same as we've had 10 years back, the thing is 15 or 20 trillion, beyond the capacity of Congress to deal with. The pain they're talking about, like CPI, going to chain, that would only save 200 billion, 1%, 2% of the problem. So it's frozen, it's paralyzed. We're going to have fiscal crisis year in and year out, quarter in and quarter out for the next 10 years. Second, Joe, I just want to get this in. The other branch of the state is the Fed, the central bank. It's a rogue system. It's the most dangerous serial bubble machine in history. It truly is. Here we are for the third time back in the region of 1550. You know when we were here last on the S&P 500? Some of you were here 4,750 days ago in March 2000. Okay, we've had two massive crashes since then, two bubble reflations, and the real economy has gone nowhere. On that 13-year period, we've only created 17,000 jobs a month when we need 150. Most of them have been part-time jobs, not in the middle-class, family-supporting economy. So we have an economy that's drifting into failure on Main Street. We have a Fed that simply pumps and repumps.
But to the whore of the left, you're not anti-capitalist at all. You wish you could go back to free enterprise.
Free enterprise, fiscal rectitude,
and we've gotten away from that with crony capitalism.
David, what is the role of the Fed in a crisis? What should the Fed be doing?
Exactly what Bagehot said it should be doing in 1871, and that is loaning freely at a penalty rate above the floating rate of the market. And that's where Bernanke went totally wrong. The interest rates wanted to go to 6, 8, 10, 15% in order to basically cut down the excess and the wild speculation that was in the canyons of Wall Street at the time. He should have let the interest rates go up. J.P. Morgan did that in 1907. They carried out the speculators, the copper barons, the real estate.
Would you say Volcker did it too?
I would say Volcker did it because when Volcker went after the speculators in commodities, and that's where we were in 79 and 80, he didn't say, oh, please, can I raise the discount rate 25 basis points like that?
Right, it was torpedoes be damned.
He raised it 200 points.
It doesn't come without pain, no matter how you. It doesn't come without pain, no matter how you.
There has to be pain because there shouldn't be bubbles. And my book is really, among many things, an attack on the Greenspan predicate that we can't see a bubble, we can't hear a bubble, it just comes along, and we have to stand around. But let me finish, and wait till it crashes, and then after it crashes, flood the market with liquidity, and then begin to inflate another one. That's wrong. The Fed shouldn't be creating bubbles, and if it were doing its original mission, which is simply to supply liquidity to banks at a floating interest rate rather than be the central planner. The Fed is the central planner for the U.S. economy. 12 people on the Open Market Committee are the monetary Politburo of the Western world. They can't do the job. They're failing.
Where would the economy be if the Fed hadn't stepped in, if the government hadn't taken the steps to do it? It's a hypothetical, it's a counterfactual, we'll never know, but the view according to you.
The counterfactual is what the whole Keynesian case is based on. If you didn't violate every single rule of sound finances ever invented, balanced budgets, sound money, free markets, consequence of failure. If you didn't violate all that, they say it'd be far worse. How do I know? Here's what I do know, that if the Fed hadn't created the bubble by lowering interest rates to 1%, the housing calamity, which they couldn't see, we wouldn't have had the crash. So you can't say that once you have a crash created by the bubble of the Fed, that now you have to go and do it again.
But should the Fed have done anything after 9/11? Because that was where things went a little haywire to begin with.
No, the economy was very strong, Becky. If you look at the history, you will see that the recession of 01-02 was so light it can barely be measured. It lasted for 2 quarters. Excuse me. It was 0.1 or 0.2 of GDP. So Greenspan panicked, totally panicked. It was the 3rd time he had done it. He did it in '87 after the the meltdown. He did it in 1998 after long-term capital. That was terrible. The economy was booming.
I think what people worry about is that you're describing, and I agree to some extent, that we're going through the death of 1,000 cuts. Here we are in this it's something that we're just bouncing along the bottom. And some people wish we just flushed the system, flushed it all out, let things happen, let it go where they may. Some people think, like with the Depression, that fed on itself and actually became worse than it had to be because you didn't do anything to stop it. A cathartic flush of the system doesn't always work. You don't always come out of that rip-roaring at 8% like you did in the 80s.
The Great Depression was a unique circumstance. I got a couple chapters, Joe. You might want to take a look at it. It was the delayed after effect of the catastrophe of World War I. We haven't had a World War I lately.
So you think we should have flushed the system in 2008? We should have just flushed it?
We should have flushed it in 87, 98, 2001,
let the markets work.
208. We're doing the same thing over and over. Didn't Einstein say that the sign of insanity is when you do the same thing over and over and you expect a different result? This is what we've been doing now.
Is there any way for us to avoid, like, you read Mark Faber or seen what he says, is that where we're headed? Is there any way to avoid paper money being worthless?
Yeah, I don't know. I think we're headed more for a deflation than an inflation, because I think essentially people say, oh, the bond vigilantes, they're happy. This is what Krugman says. The bond vigilantes are smart. They're simply front-running the Fed.
Right.
Everybody's front-running the Fed, and they're repoing the bonds they buy at 98 cents on a dollar for 10 basis points. So when the Fed says, I'm going to got your back, you can borrow overnight, day in, day in, day in, for 10 basis points, and I'm going to keep the bond up at par or at 180. What a spread. They're laughing all the way to the bank, and they're sleeping like babies every night because they're trading off the great Bernanke.
We're going to get Scott to respond to all this, because we'd be in cash listening to this.
David, cash.
David,
That's fine.
thank
it won't
you.
hurt you.